Good morning. I am Anuj Singhal, and this is your pre-market setup. And as I've been warning for last couple of days, the complacency factor in the market may at any stage catch up. And don't overstay your welcome was the message which the market was sending loud and clear. And those who would have got the message would have been out of the market yesterday, or at least individual stocks yesterday. But yesterday looked ugly. In fact, if it wasn't for Infosys, the market would have had a really ugly day yesterday. Infosys was the only bright spot in an otherwise dull market, in an otherwise weak earning scenario. You could point out negatives in all the earnings. For HDFC Bank, you could point out slightly weak asset quality. For HUL, you could point out price cuts. For Asian Paints, you could point out the clear pessimistic body language of the management or forward-looking commentary. So clearly, the market was spooked by all of this, and this morning, even the global factors are not supportive. So there's a good chance that you start this morning sub 8,500. So from 86 something to get into 84 something in a matter of 2 or 3 days is telling you that at 8,600, clearly the risk reward is not in your favor, and that really still stands the case. This market has been lacking delivery-based buying, so it was vulnerable to any kind of big fall. But remember, on Monday I said that this market is vulnerable for a 100-200 point fall, which could come anytime, and I'm not surprised that that has happened. Now going forward, the way to play this market is to, for now, just stay out. Today would tell you whether the market texture has changed again and whether short positions can be taken fresh, or whether indeed it was a blip and will the market be back to 8,600. Either ways, this is not a market yet in which you still want to take large positions and carry them forward. This is not a market for this. This is a market in which you want to take 30-40 points here and there in the direction of the trend. For example, a trade that could still work out is maybe a pair trade on Infosys and the Nifty. Maybe Infosys still does well, Nifty doesn't do that well. That could still happen. Stocks like Sun Pharma, there could be a bit of short covering bounce, but still they could remain weak because the news is materially negative. And this morning the global cues are distinctly negative, so keep one eye on global screen as well. FI data is indicating that yesterday some complacency was shaken out, but at the same time, a lot of people who were stuck with short positions also covered this short. So the market may not have too much of short support as well going forward. So I won't be surprised to see a bit of a one-way downward journey now towards say 8,400 or 8,300, given that the earnings are not supporting the market.